So if anyone does have a question, Gordon's roving around for you to raise your hand. Speaking of those penalties, the free zone corporate tax regime does offer a 0% corporate tax rate, so that is available. I'm interested on the thoughts. How does one qualify for that? Yes, Alai, you would like to add something?
I will make it very easy. How many of you are having free zone companies?
So how many people here have free zone companies?
Very
Okay,
few.
we've got a few hands, yes.
If you want to avail 0% tax scheme, first, you need to check you are in a free zone. Second thing, you need to have a arm's length transaction. That means all your transactions should be at the market rate. Third, you need to have audited financial accounts. Fourth, most important, don't forget, you have to meet the de minimis requirement. If you meet the de minimis requirement, then only you can avail the 0% tax regime. There are two types of activities for free zone person. One is qualifying activities, one is excluded activities. If you are doing the qualifying activities, then you can avail the scheme. But if you are doing the excluded activities, even then you can avail the 0% tax scheme. How? There are two portions of your revenue. One is your qualifying revenue, one is your non-qualifying revenue. Qualifying revenues are from free zone to free zone persons and from qualifying activities. And non-qualifying revenue part is from your excluded activities. If your non-qualifying part does not exceed 5% of total revenue or 5 million, whichever is lower, then all of your non-qualifying income will become qualifying income and you can avail 0% tax regime. However, if you are unable to meet any of the requirements, like you need to have adequate substance in the free zone, you need to have audited accounts, you need to maintain arm's length transaction. If you fail to do any of it, then you will be disqualified for next 5 years.
That's right. Okay. And when it comes down to that corporate, just on that, you mentioned, anyone here got any questions?
My question is that as UAE is the trading hub, then a lot of companies are operating for the trading business mainly over here. What are the exemptions available in the corporate tax of the high sea trading?
Okay, so other forms of exemptions?
Yes, and then I come to heard that there is some exemption that zero rated can be done for the high sea trading.
High security?
High sea trading.
High sea, okay, yes.
Okay, yeah, I will say that. Only the companies which are incorporated in designated zone, they can benefit from high sea sales, or you can say drop shipment. In that case, you buy from one country, from a manufacturer, and you sell it to another country. That should be a retailer or distributor. It should not be an end user. If you are buying from country A and the goods do not pass through UAE, that is from the designated zone, even then you qualify for 0% tax regime.
Just a continuation of that, if there is a company which is doing high sea trading, plus they are having businesses in the mainland also, they will qualify that one or no?
Yes, there are 4 criteria from designated zone for trading business, distribution businesses. Number 1 is the high sea sales. Number 2 is that if you have a company in designated zone and you buy goods from a mainland manufacturer and you sold those goods outside the UAE, GCC or abroad, means export, but that sale should be also to a retailer or distributor, not end user, then you will qualify for 0% tax regime. Third criteria is that you are a distributor company incorporated in a designated zone and you import goods abroad from inside the designated zone, and then from designated zone you sell those goods to a distributor or retailer in the mainland, then it will also qualify for 0% tax regime. The 4 criteria is that you buy goods from a mainland, you are a company incorporated in designated zone or distribution company, you buy goods from mainland manufacturer and then you sell those goods directly to another mainland company without passing through the designated zone, but the buyer, the seller whom you are selling should not be end user. In that case also, you will qualify 0% tax regime. Thank you.
Hello, Assalamu alaikum everyone. My question is that, in continuity of this question, like we have spoken for the free zones. Now, if the company is in mainland and they are doing high sales, high sea sales. Like if company is registered in the mainland and they are exporting something, they are purchasing something from America and exporting to Africa, just a switch BL. The funds are coming in UAE. So how we deal with those transactions? Is it like in VAT, it's out of scope, but how to deal with the corporate tax?
See, there is a confusion. A lot of people confuse VAT with corporate tax. That's the main thing. Because VAT was initially implemented in 2018. And VAT is linked with threshold. If you meet the threshold of 375,000, then you get registered. But corporate is not linked with threshold. You don't need to register if you meet a certain threshold. Even if you don't have any activity, if you don't have any bank account, you just have a trade license, you get to get yourself registered. And VAT export was 0%. But in corporate tax, taxable persons, worldwide income is taxable. It depends on otherwise slab. If you exceed 375,000, then the excess amount will be subject to 9% for mainland companies.
Thank you. So we need to thank our panellists because this has been a fascinating topic. Nirav Shah, the Director of Fame Advisory, Sahil Mehta, the CEO of Shura Tax Consultants, Mustafa El Rafay, the General Manager of Integrity Accounting Services, Alaya Noor, the Tax Genie, as we can call you with your three wishes, the Associate Partner, of Ahmed, Alagabaya Chartered Accountants, and Josefa Saifuddin, the Co-Founder and CEO of the Brooks Group. Could we give them a round of applause, please?